Hello and welcome to this Monday's weekly market briefing. We've got lots to talk about, but firstly, UK, Germany, and France step up calls for Israel to agree to Gaza ceasefire, as well as that investors ditch notion that interest rates will stay higher for longer, as well as that also German far right party, the AfD party, does make a fresh electoral breakthrough in a region in relation to a mayoral election. We've got lots to talk about on the charts, also with lots happening on the economic calendar. We'll come to that near the end, so make sure you stay around so you see that. Before we get straight into it, make sure you subscribe. But the first article to talk about, of course, is the UK and Germany and France. Now, Israel is facing greater pressure from allies over the cost of war in Gaza, and this comes as the UK, Germany, and France increased calls for a ceasefire. Now, obviously, we've been covering this war since, its very beginning, covering it since the October the 7th terrorist attack by Hamas, where obviously so many Israeli civilians were massacred, as well as Israeli soldiers killed at gunpoint. Along with that, over 200 hostages were taken and then stored within Gaza. Now, we know that over the past few weeks, Israel has been conducting a ground and aerial operation into Gaza, bombing suspected targets, terrorist targets, as well as engaging in a ground offensive, so sending in its soldiers and armoured equipment to try and take down Hamas, as their plan is ultimately to destroy and eradicate Hamas. This has been the repeated goal of Netanyahu's government in relation to this invasion. With this, however, this has created, however, some large collateral damage, killing thousands upon thousands of Palestinian civilians, and this has caused international condemnation of the actions by Israel, of course. However, Israel does argue that these acts are simply in retaliation for the October 7th terrorist attack, and simply in an effort to eradicate Hamas from Gaza, and that they are deliberately only attacking suspected terrorist targets and engaging Hamas militants. But obviously this has seen much criticism in relation to the humanitarian cost, and recently we've actually seen aid flow once again into Gaza. Now, a key issue has been the hostage deal between Gaza and Israel, with Hamas obviously holding many of the Israeli hostages, but also other militant groups within Gaza, and therefore there's been an attempt prior to the ceasefire that's now being called for, where hostages were exchanged. This was only women and children, however, and the only male hostages that have really been taken back by Israel are those which have been captured in the process of invading Gaza. That said, we've recently run into the controversy of a friendly fire incident where 3 Israeli civilians have now been harmed and killed by IDF soldiers within Gaza, as these 3 civilians did escape Hamas's prison, which they were holding in just a house, let's say, and waving a makeshift white flag. This was mistaken by IDF soldiers as Hamas militants, and these individuals were shot dead. This has caused mass calls domestically for a new hostage deal. But as we've talked about before, ultimately the more far right sectors of the Netanyahu government do not want a ceasefire at any cost. In fact, they want this military operation instead, as they don't believe that any deals with Hamas are fair to even engage in, as they consider Hamas as a terrorist organization and therefore must be eradicated before any deals are made. But this has created a tough situation within Israel, and especially for the Gazan civilians, of course, with the calls for another hostage exchange growing domestically as well. This grew following a friendly fire incident involving the IDF and 3 hostages. Now, we have heard these calls for increased deals prior to this incident. We had, the bring them home rallies, where once again relatives of the hostages were campaigning against the Netanyahu government and calling for more ceasefires, to allow for these hostages to be exchanged for Palestinian prisoners. Relatives of the 130 hostages held by Hamas did lead a rally in Tel Aviv against Netanyahu. And Israel's air and ground war, destroying large parts of northern Gaza, killing 19,000 civilians, according to Hamas's health ministry, and driving refugees southward. Now, Joe Biden last week did describe the IDF bombing as indiscriminate, and this is very significant rhetoric from Joe Biden, as the main rhetoric that we have been hearing from Joe Biden is one which has been very much pro-Israel. But hearing this kind of comment about how Israel is conducting its bombing, even referencing the fact that Israel may be conducting its bombing without discriminating between civilians and terrorists. This does create a new issue for Israel, as the US is the leading ally for Israel. So if the US does now start to fall back on its claims of supporting Israel, we could then see Israel's ground offensive come to an end. The destruction led to an overwhelming vote in support of a ceasefire by the UN. Now, the IDF, however, justified their actions through arguing a ceasefire would not change Hamas's murderous ideology or lead to the release of hostages. And obviously, Israel has already suffered those 120,000, 1,200, hostage. 1,200, Israelis were killed, obviously, on the October the 7th attack, and obviously having so many more civilians then be taken hostage. This has created a really tough situation for Israel, as they've had to try and deal with whether they should continue this ground offensive or they should focus on bringing home those hostages. And that's the tough situation. Now, Western allies have been attempting to tread a diplomatic path with maintaining support for Israel in its fight against Hamas, while still calling for a two-state solution. Now, Netanyahu's right-wing government could face further pressure to rein in its military campaign when US Defense Secretary Lloyd Austin visits Israel next week. So that's going to be important to look out for. So listen out for that. But, keep your eyes on this, as the humanitarian cost does grow, and, many hostages do remain within Gaza as well. So keep your eyes on this. This will be influencing world tensions, which of course influences safe haven assets like gold. Next article to talk about, though, is investors. Now, the recent rally in bond markets have destroyed any investor expectations for high interest rates, with the US 10-year yield falling to 4% for the first time since August, and likewise for the 2-year yield as well. The same case in Europe can be seen, with the 10-year bond yield reaching its lowest level in 9 months. Now, we've been covering this topic largely in relation to the Fed and the ECB and the Bank of England, as the rhetoric for the last 3 months, 2 months, 4 months, let's say, has been one which is very hawkish, talking about rates staying high for longer, with there even being the possibility of another rate rise within 2023. Obviously, we're now past that. There's no possibility of that now, and we're now seeing this more dovish rhetoric, with Powell saying rates were likely at or near its peak for this tightening cycle. As well as the rally in the US did follow that Fed's dovish rhetoric in relation to raising rates further. This rhetoric spun markets on their heads, which were bracing for a long period of high interest rates as central bankers did continue their battle against inflation. Now, recent economic data, however, did show a more cooling economy and lower inflation. However, this did trigger these expectations to be turned on their heads. Now, markets now expect 6 US rate cuts in 2024, beginning March, with these expectations meaning rates would end up around 3.9% by the end of the year. And that's a significant drop in interest rates, of course. And we would be nearing at that point the rates where the point where interest rates may be expected to be held for the foreseeable future. And despite Powell's warning of these expectations being premature, markets have rallied, with the S&P 500 ending its 7th week straight of gains, reaching ever closer to a record high. Now, the drop in bond yields have translated into far lower borrowing costs for companies. So, significant damage significant levels, which have now enabled companies to achieve those lower borrowing costs, which obviously they were struggling with greatly. And this is why we did see, this kind of drop within the stock market, and now we are seeing that kind of rally as we do come out of this era of high interest rates, quite possibly. So keep your eyes on this most definitely. Next to talk about, and last article to talk about, of course, though, is the German far right party, the AfD. Now, a far right AfD party has won its first mayoral election for a mid-sized German town, with this representing another milestone for the party's growing popularity in Germany. Now, obviously, German politics, European politics, this is important to understand as we do go into the European parliamentary elections next year, as well as the British elections next year. It's important to have a good understanding of where Europe's politics is at, as we can then translate this economic policy, these outlooks, into how the economy may function, how the central bank may act, and how therefore the markets within that nation, as well as the foreign exchange rate, may behave. Now, Tim Lochner won 38.5% of the votes in Sunday's second round of ballot in Pirna, beating centre-right candidates from both the CDU and Liberal Free Democrats. A survey published on the weekend by newspaper Bild showed 59% of voters want elections to be next year to allow for a change in the federal government. Sections of the AfD have been designated extremist by German intelligence services, with leaders being on trial for using banned slogans and having plans to overthrow the government. Despite this, voters are abandoning traditional parties to vote for the AfD. This is largely as a result of surging inflation, a stagnant economy, and illegal immigration. Now, traditional parties, however, have promised to not work in a coalition with the AfD party. So this is some very significant news, of course. Keep your eyes on this as we do go into elections next year within Europe. That's all to talk about on the articles, though. Next to talk about, of course, is the charts, where we do have quite a bit happening going into kind of this last week, really, of the markets, in some ways, as we then will be in the Christmas New Year period, and then it's 2024. So this is a significant week, as we kind of do round off the year. So quite possibly, we're going to be seeing some interesting moves. Now, first to talk about, of course, is US indices, with US indices seemingly stalling, and as here we do have the US 30. Now, of course, last week we did see that rally within US markets, and this is represented here as US 30 did move out and break out of this range that we were seeing price range around, and take a significant move to the upside following more dovish rhetoric from Powell. And ending the week, however, we did see this stagnation. Now, the question is, where will markets now go after it's stagnated, as we're going into the end of the year? And the possibility is always there that, because we're ending the year, asset managers or investors want to sell off, start the new year kind of straight, and therefore we may see this sell off. If we look on the RSI, quite interestingly, we are seeing this kind of small divergence where price is actually dropping. The RSI points is actually dropping in comparison to price actually on the uprise. This is what we see after kind of a strong move to the upside and then a slowdown in momentum. So keep your eyes on the US 30, as we do have the potential for a rollover. And as here, I have got marked out, a few Fibonacci levels to kind of look at where price could retrace to before moving away. So keep your eyes on this. Next to talk about, though, is the dollar, of course, which is experiencing a bullish retracement as it did end last week. And interestingly enough, it's now around that 38.20 period, which is also in line with this significant liquidity level. So keep your eyes on whether the dollar now does react to this liquidity level, as overwhelmingly that dovish rhetoric from the Fed has created this expectation for more bearish movements on the dollar. That said, we are still hearing from Powell that we need to remain kind of calm and wait for more data, and any kind of expectations about rates being early in 2024, being cut early in 2024, sorry, are kind of premature. So, quite possibly we will now see this kind of resurgence in bullish momentum as, those on the buy side have now gained a good price around 102. But then again, keep your eyes on this as we are sitting around that liquidity level. Next to talk about though is euro dollar, which has now seen a sell-off from this area, this double top that we did note last week. Interestingly enough, going into this week, price is now sitting around this liquidity level that we did note, which could provide that support needed, as well as that price is also kind of sitting on that 38.20 Fibonacci level. So quite possibly this will once again provide the support needed for Euro USD to continue on that push to the upside. That said, having that double top does create this kind of more bearish kind of sentiment, as we kind of do see that there is strong sell side momentum within the market still. Keep your eyes on this though, as there's great potential for upside momentum, of course. Next to talk about though is pound yen, which kind of pound yen, since the yen kind of the yen rally and the kind of crash that we did then see on the charts, pound yen has been in a weird situation where it's kind of been ranging up and down, moving in very volatile matters. So I would say this is kind of an asset that's more so ruled out until the new year, as it's kind of less so respecting clear levels within the market. We did see a double bottom be made last week, but it's hard to know what levels will be respected going into this week. But keep your eyes on pound yen. Next to talk about though is Bitcoin, which is in a ranging position. Not much to say on Bitcoin. However, it is interesting to comment that the level that we did mark out last week, the 6180 level, a strong area of liquidity as well, did react in a bearish manner for Bitcoin, and we did see that sell off from that level. So it'll be interesting to see where Bitcoin may now move. Gold, on the other hand, is also ranging. And this is despite, in fact, the Fed's kind of more dovish rhetoric. I mean, we did see this kind of bullish momentum following the more dovish rhetoric, but ultimately it did stagnate around this area of liquidity and resistance, and we have seen a small sell-off from that level. If we draw out the Fibonacci retracement to on a more lower time level kind of view, if I pull these up here, price is sitting around this 38.20, but it's hard to know where price may move now. But keep your eyes on this. It's in an interesting position for sure. But yeah, lastly to talk about in the charts though is oil, which is in a very interesting position because markets, the price, did come up and tap this area of liquidity and resistance that we did note as a key level, which we'd be expecting a sell-off on oil. However, despite seeing a short move to the downside, price did spike up by the end of last week. So going into this week, it's hard to know where price may go. It's clear that, this is a strong area of sell side momentum. But at the same time, is there enough momentum to actually make a significant move to the downside, as we have now seen that price struggled to move lower? So quite possibly we could be looking at a bullish week this week, as we did see this kind of bullish kind of divergence on the RSI, so quite possibly we've got some bullish momentum that's kind of not really noted on the plain charts, but is very clear on the RSI. But keep your eyes on this, potential for a sell side movement, but at the same time potential for an upside movement. Keep your eyes on oil. That's all to talk about in the chart. So lastly to talk about, of course, is the economic calendar and what data we have coming out this week. Now, firstly, we will be getting German business climate data, so listen out for that. As well as that, and importantly in the topic of pound yen, we are getting the Bank of Japan's interest rate decision. Last week we had the Bank of England's. What will the Bank of Japan be saying this week? It will be interesting to hear. As well as that, we're getting Eurozone core inflation rate figure being released, along with Canadian inflation rate figure, which is coming out. As well as that, we're getting the US consumer confidence figure and US GDP growth rate figure. So those will be interesting to note. As well as that, we're getting the Japanese inflation rate figure, along with the British GDP growth rate figure. So lots of data for sure. And finally, we will be getting US inflation index figure and durable goods orders data. And finally, we're getting US consumer sentiment, again. So that's all the data coming out this week. Lots of data to note though as we do end off the year. Hope you have a great trading week, but that's all from us at Wildwood Capital. We've covered a lot on the articles, lots on the chart, and lots on the economic calendar, but that's all from us. Have a great trading week. See you later. Bye.